This 3 dividend stocks portfolio will surpass your full-time job. Ever imagined replacing or even surpassing your full-time salary just by letting your money work for you? You might have given up on the thought because it sounds too good to be true, but it really is achievable. With a single $10,000 investment today, you could grow a portfolio that pays you over $5,800 per month in passive income. In this video, we're talking about the 3 powerhouse dividend stocks that could change the game for your portfolio. We'll break down how they generate wealth, how their dividends stack up over time, and why they're built for long-term success. By the end, you'll see how just $10,000 invested in these stocks could grow into a serious income stream, one that pays you month after month, potentially enough to cover your bills or even replace your paycheck. Let's dive in. MO. Altria Group Inc. MO isn't just a tobacco company. It's a cash flow powerhouse with multiple strong business units driving its success. Most people know it for Marlboro, the undisputed king of U.S. cigarette brands. But there's more to the story. Altria operates 3 key segments: smokable products, smokeless products, and wine. The smokable division, led by Marlboro, holds over 40% market share in the U.S., proving its dominance even as cigarette use declines. The smokeless segment includes brands like Copenhagen and Skoal, major players in the growing alternative nicotine market. And while wine might not be its biggest business, Altria's St. Michel Wine Estates gives it a premium foothold in a completely different sector. We will mention, though, that the landscape is shifting. There is declining demand for traditional cigarettes. In response to this, Altria has ventured into the smoke-free market, acquiring products like Enjoy e-vapor and the On nicotine pouches. Financially, Altria's performance has been a mixed bag. In 2024, the company reported revenues of $20.44 billion, a slight dip from the previous year. However, net earnings saw a significant boost, reaching $11.26 billion, a 38.84% increase. This uptick was largely attributed to favorable tax provisions. In 2024, the stock experienced a remarkable surge, climbing nearly 30%. This rally was driven by investor optimism surrounding the company's diversification into smoke-free products and its robust dividend yield. Now, let's talk about why it is an attractive investment. The dividend yield currently sits at an impressive 7.75%, making it one of the highest-yielding blue-chip stocks out there. That's cash flow straight into your pocket, and it gets even better. Altria has been steadily growing that dividend at 4.17% per year. This means not only are you getting strong passive income now, but you're also seeing that income increase over time, helping to keep up with inflation. Beyond just dividends, over the years, the stock has provided an annual return of around 5%. And while that might not sound groundbreaking, when you combine that with the dividend, you're looking at a solid total return. It's a classic example of stability in a market where volatility can be unpredictable. MO is undeniably a powerhouse for high dividend and consistent growth, but the next stock we have lined up is just as brilliant. PFE. Pfizer Incorporated. PFE isn't just a pharmaceutical giant, it's a global leader in healthcare innovation with a legacy dating back to 1849. The company operates through 2 major business segments, Biopharma and Pfizer Center 1. Biopharma is the heart of Pfizer, responsible for blockbuster drugs like Ekilis, a top-tier blood thinner, Prevnar, the world's leading pneumonia vaccine, and groundbreaking oncology treatments. Of course, it also made history with the COVID-19 vaccine and antiviral Paxlovid, proving its ability to lead during a global crisis. This segment drives the majority of Pfizer's revenue, consistently delivering life-saving medications across multiple therapeutic areas. This brings us to Pfizer Center 1, its contract development and manufacturing business. It partners with biotech firms and pharmaceutical companies worldwide, helping bring new medicines to market with its state-of-the-art manufacturing and supply chain expertise. What makes Pfizer exciting is its relentless innovation. With a strong drug pipeline, a focus on cutting-edge treatments, and a commitment to shareholder value through dividends, this company isn't just about the present, it's about shaping the future of healthcare. Despite its strength as a major player in the pharmaceutical world, Pfizer faces some challenges, such as impending expiration of patents on several of their unique products that could impact its market share and profitability. Counterfeit products can also harm Pfizer's brand reputation, but of course, it's not all bad news. Pfizer has been proactive in response to these challenges. They've engaged in strategic acquisitions, investing over $60 billion in the past 2 years to bolster their pipeline and mitigate the impact of patent expirations. On the financial front, Pfizer reported revenues of $63.63 billion in 2024, marking an 8.77% increase from the previous year. Earnings also saw a substantial rise to $8.03 billion, a 279% jump. Despite these positive figures, the stock did experience a downturn, with shares nearly halving since their peak in late 2021. This decline is attributed to factors such as falling sales post-pandemic and increased competition. Pfizer might be facing some challenges, but when you look at the numbers, it's clear why this stock remains a compelling choice for long-term investors. First, there's the dividend yield of 6.68%. That's an incredibly strong payout. And it's not just a one-time deal. That dividend has been growing at an annual rate of 2.42%, ensuring that investors continue to see rising income over time. Then there's the stock performance. Despite recent setbacks, Pfizer has historically delivered an 8% annual return on its share price. That means investors who stick with it through the ups and downs can expect solid capital appreciation alongside those dividends. Now let's move on to the last piece of our portfolio puzzle, a piece that will help you turn your initial $10,000 into a passive income over $5,800 monthly. VZ. Verizon Communications, VZ, isn't just another telecom company. It's the backbone of America's digital connectivity. As one of the largest wireless carriers in the U.S., Verizon operates through two powerhouse business segments, Verizon Consumer Group and Verizon Business Group. Verizon Consumer Group is the bread and butter, serving over 90 million postpaid customers with wireless, broadband, and digital TV services. Whether it's 5G ultra-wideband for blazing fast mobile speeds or Fios fiber optic internet for seamless home connectivity, Verizon keeps millions of people connected every day. Its wireless network consistently ranks among the best for coverage and reliability, making it a go-to choice for customers. Verizon Business Group takes things to the next level by providing enterprise solutions to businesses, governments, and global organizations. From advanced cybersecurity to private 5G networks, Verizon powers the infrastructure behind smart cities, healthcare innovation, and cloud-based enterprises. It's not just about cell phones, it's about shaping the future of digital communication. What makes Verizon stand out is its relentless push for 5G expansion. It's already one of the biggest players in this space, and as 5G adoption grows, Verizon is positioned to dominate the next era of connectivity. However, the telecom industry is fiercely competitive, with rivals like AT&T and T-Mobile vying for market share. Thankfully, Verizon is committed to staying ahead in the technological race. In terms of stock performance, Verizon shares have seen some fluctuations. Over the past year, the stock has traded between $37.59 and $45.36. As of February 13, 2025, the stock closed at $41.04, reflecting a modest increase from earlier in the year. Analysts also have a buy rating on the stock, with a 12-month price target of $46.19, which suggests a potential upside. Verizon might not be the flashiest stock on the market, but when it comes to stability, income, and long-term growth, it checks all the right boxes. Right now, it's offering an impressive 6.80% dividend yield, meaning investors are getting paid handsomely just for holding the stock. And it's not just a one-time thing. that dividend has been growing at 1.90% per year, ensuring a steady increase in passive income over time. Beyond the dividends, Verizon has also delivered an average 9% annual return on its share price. That means investors who stay the course can expect both solid capital appreciation and consistent income. Now, let's put MO, PFE, and VZ together to prove step by step that you can grow a portfolio that will generate the kind of dividend income that surpasses your full-time job. As we break down exactly how this portfolio builds wealth over time, there are two things to keep in mind. First is that the high dividend yield at 7.08% and dividend growth at 2.83% will come primarily from MO. As for the strong share price appreciation at 7.33%, that will be driven by PFE and VZ. Together, you will see that they create a balance of income and growth, and the results are incredible. Now, imagine you invested $10,000 into this portfolio and did absolutely nothing, no constant trading, no stressing over market swings. After just 5 years, your portfolio would have already doubled to $20,000, and you'd be earning around $1,300 a year in dividends. Passive income rolling in without lifting a finger. Fast forward to 20 years and things get even more exciting. Your original investment has now grown to $178,000, and your dividend income? A solid $13,300 per year, or roughly $1,100 per month. That's real money, enough to cover major bills or even fast-track an early retirement plan. But the real magic happens at the 30-year mark. By then, your portfolio has ballooned to an incredible $850,000, and your dividends? A jaw-dropping $70,000 per year, or $5,800 every single month. That's not just a little extra cash, that's financial freedom. And here's the beauty of this strategy. MO, PFE, and VZ operate in completely different industries: tobacco, pharmaceuticals, and telecom. 3 sectors that don't move in sync, reducing risk through diversification while still delivering reliable income and long-term growth. It's a portfolio that works hard, so you don't have to. At the end of the day, investing is all about putting your money to work for you. Whether you're drawn to the high yield of Altria, the innovation potential of Pfizer, or the stability of Verizon, each of these companies offers a way to build long-term wealth while collecting steady income along the way. Ready to kickstart your investment journey? Do share your thoughts in the comments. Like, share, and subscribe to the channel if you haven't already, and hit the notification bell so you don't miss out on future tips.